morning to all traders. In the previous Forex Majors Market Insights video, we talked about Euro dollar and Aussie dollar finding very strong support and bouncing at least or start slowly reversing to the upside. Aussie has failed us, so we have to give a new projection now, and this is going to be the first one to start for the day. Of course, Euro dollar is still holding well. Now we're going, of course, to see quickly the dollar yen as well and the pounds dollar, because we are expecting the real Brexit on Friday, plus the coronavirus fears actually seem to be increasing as the death toll has reached now the over 100 people. Starting off with Aussie, because it's the one that actually saw a very big decline yesterday, over 1%. We were seeing this previously, just to remind you. We were seeing this as a triple zigzag pattern, right? Now, this could still be the case, but we could also see, of course, that declining further down. If this continues being a corrective pattern, okay, so we should be looking at prices potentially start reversing now and moving all the way to the upside to complete wave 4 in the intermediary degree, and also is also the end of the combination. Now, that could turn out to be a triangle, it could turn out to be an ABC. However, the problem with this structure over here is that although it looks corrective, right, it could simply just turn into a 5, which means that we are going to get another ABC and then break all the way to the downside to fresh lows. That means that wave 4 has ended over here around 70.33. We could still see some further downside. Now, when I go up on the euro dollar now, we've seen the German IFO yesterday, worse than expected. We were looking at this as a WX, it's triple zigzag as well. We are holding actually quite well over here still, right? It may break down, it may not. But as long as we remain near this level, okay, and since this is looking quite corrective, we could still get another move to the upside to complete in the immediate wave 2 of this longer term degree, and then move all the way to the downside. Now, of course, and similarly to Aussie, although Aussie is, of course, weaker, and that can be easily proven on the charts, we could have this wave 2 ending here. However, this last move, and contrary to Aussie, looks really corrective, okay? Aussie could be impulsive. This one is really corrective. Really seems to suggest, and since we are at the 61 Fibonacci extension of this move to the upside, that we could now start seeing slowly prices move to the upside. We could even go down to the 1.095, which is a very good support level. That is a 78.6 Fibonacci retracement level. We could potentially go to the previous high over here, which is the 110, of course, which is a very strong psychological support level. Dollar yen quickly. Dollar yen is a bit tricky, okay? We talked about this ABC for a while now, and this, of course, being ABC, D and E, a part of a triangle. We're talking about this becoming an ABC that is going to end in the intersection of the ascending trend line and the descending trend line, and also, of course, near the 61.8 Fibonacci retracement. Price, of course, is getting far from that level, which means can mean actually two things. Okay, one, okay, we're not going to get another move to the upside, and we'll have an early correction down for wave E, or we've had 1, 2, 3, 4, 5. Okay, that is wave 1. That is wave 2. And then we're going to see 3, 4, and 5. This could actually form a nice triangle pattern for wave C. The question now is that what happens in the short term? Well, given the safe haven appetite, I would expect, since this is 1, 2, 3, 4, and 5, this is an A. We could expect a B, just a short correction to the upside, and then another move to the downside for wave C. That is likely going to take prices down to 108.5 or so, 50 or so, okay? Or actually, if we go a little bit closer, we'll be able to see that wave 1 is a little bit lower. It's around 108.46 or so, okay? And from here is where we can start looking for buys. Now, if we break below that level, then most likely it means that we're going to get prices start moving lower, which suggests a different pattern to what we've already analyzed in a little bit more detail than the rest patterns, than the other patterns. And pound quickly. We talked about this actually last time, and I'm still expecting this to end up lower, okay, in the short term at least. We talked about this being A, B, C, and then moving up. That's not the case. It looks like to me that this is an A, B, and a C, okay, and this unrolls down in a W, X, and Y pattern, right? A double zigzag, if you ask, because we've had an ABC as the first move to the downside, then another ABC to take out X, and we can expect now another ABC, which means that we've had waves 1, 2, we're going now for wave 3, which unrolls in a smaller degree, then we're gonna see 4, and then probably 5 breaking below the 129.0, 129, let's just say, take out these stops, and then start moving to the upside.